For a deeper dive into the U.S. economy, let's turn to Gregory Daco. He's Chief U.S. Economist at Oxford Economics. Greg, thanks so much for joining us. First, you're a Fed watcher. Did Fed watchers like you get the answers you were seeking?
Yeah, I think in general, what we learned today from the Fed was in line with consensus expectations. The Fed is ready to start tapering its asset purchases, its QE program, and it will likely start to taper next month, in the month of November, going into the middle of 2022, but it's likely to hold off on interest rate hikes until at least the end of 2022, if not early 2023, which is Oxford Economics' view.
Should it have done so earlier?
No, I think what we are seeing is essentially the Fed reacting to economic conditions, to inflationary dynamics, and to its outlook for both employment and inflation. Powell was very clear to say that essentially the test for inflation in terms of tapering its asset purchases had been met, and the test for employment had all but been met. So we're very close to an environment where the Fed is going to consider easing up on its QE asset purchase program, and it will do so fairly gradually over the next 8 months likely, but hold off on raising interest rates and raising potential borrowing costs for companies and individuals until about 18 months from today. So hawkish lean in terms of monetary policy becoming a little bit tighter, but still that dovish overall approach to monetary policy, which means essentially still fairly easy monetary policy going into 2022.
Q4 starts next week. What's your U.S. forecast for the final 3 months of this year?
Well, we know that we're past peak growth. So we know that the U.S. economy has reached peak growth. It probably reached peak growth around the second quarter of this year. But that does not mean that the economy is about to go into reverse. We also know that the Delta variant and lingering supply chain issues, both in terms of capital and in terms of labor, have weighed on economic activity, and that will likely mean a third quarter print that is fairly weak and a fourth quarter print that is a little bit higher, but still in the vicinity of around 5–6% on an annualized basis. We'll have to wait until early 2022 to see whether we see a pickup in economic momentum as health conditions are expected to improve thanks to greater vaccinations and as supply chain issues are expected to gradually diminish.
The FDA in the last few minutes approving booster shots for those needing them that may help fight this surge in the Delta variant here in the U.S. But is the economy braced for what may come in the months ahead from the Delta variant?
I think so. I think in general, what we're seeing is that there's less of a correlation between the health situation and its economic impact. What we saw with this fourth wave, this Delta wave, is that there was more caution. There was still fear, virus fear. There was a lot of virus fatigue, especially at the end of the summer, as people are a little bit depressed that this virus keeps going on and on. But the economic impact was much less grave than what we saw last year with similarly sized waves of infections. So as we look into 2022, we're going to see an economy that's past its peak in terms of growth, but still carries a lot of forward momentum with strong fundamentals supporting consumer activity, a health situation that's likely to continue to improve, and overall dynamism that should continue to support growth going into the next year. So overall, a fairly positive story for the U.S. economy, but one that will not be as strong as what we've seen over the last couple of quarters.
Jerome Powell's got a pretty tough job. He has his critics out there, but some, including in the so-called progressive wing of the Democratic Party, have urged Joe Biden to replace him. How secure do you think his job is?
Well, I think first and foremost, we have to remember that the Fed's job as the chair of the FOMC committee is one that is independent politically. So while there may be a nomination from Biden and Biden might decide to replace Powell, I think first and foremost, it's important to remember that the Fed conducts monetary policy with full political independence. That being said, I think to answer your question, I think Powell's position is fairly secure. I think he's handled the COVID crisis very well. He provided immediate and very rapid and massive monetary policy stimulus. and he did so in coordination with other central banks around the world. So I think he did a great job in terms of this recovery, continues to do a great job in terms of the new Fed framework of flexible average inflation targeting, and I think there are high odds that he will be renominated as the chair of the Fed.